Good morning, guys and girls as well. Welcome to the Q2 presentation, Björn Borg. We're back at Panzer and we're happy to be here as well. Looking back, the summer was simply exceptional. Well, perhaps a bit of rain at the end, depending on who you're asking, of course, and where you were. But no matter where I went, so Real Paddle in Marbella, my Sunday run at Kungsholmen, Action Paddle at Haninge, the CrossFit box in Visby. I saw Björn Borg apparel simply everywhere. And that is absolutely fantastic. And the product that I saw almost everywhere was our Borg tee. So it's a recycled polyester with the Borg logo on both of the arms. I'm sure you've seen it as well. And to my surprise, back to vacation, reading the newspaper Focus, and what do I see? Well, the finance guy, Tommy Jakobsson, an epic Thai boxer as well, doing the entire interview in a recycled polyester Björn Borg t-shirt. We're simply taking over the world. In a good way, because of course we want to inspire people that you can be a bit more. That if you only pick one thing today, that's training. It will make you laugh more, live longer, and be happier, and be better at whatever else you want to be better at. Training is just so much more important than just winning gold medals. You can do that too, of course, but train to live. That's what we preach. So looking at Q2, it's a strong quarter. Some super strong highlights, other things, of course, still more work to be done. But overall, of course, the major highlight is our sports apparel growth and also, of course, our ongoing momentum in our own channels. So both own on e-com, but also, of course, our own stores. The comparable one versus last year, on a very, very good growth mode, indicating that the brand is in a very, very strong position. And of course, looking around us, it's clear that the circumstances are tough. And I can feel that as well. I have less money today than what I had a year ago, and a year ago I had less money than I had a year before. And of course, there's a lot of things indicating that things will be tougher, also looking into the future. But in terms of our business and our ambitions, we believe that this is the perfect time to continue to talk about our key message that if you should only do one thing today, go training. Or walk instead of taking the elevators. Whatever you choose to do, move. That's the best gift you can give yourself. So looking at some of the highlights then. So overall, net sale was growing 3% to 166 million, and that's a record Q2, so we've never sold more. And yet, of course, 3% is not much, but a record is a record. Looking at the channels, we had a very, very strong momentum in own e-com, as we've said. Also, own retail stores, if we look at comparable stores, even though, of course, retail is declining a bit, and that's due to store closures. So as you know, since 2019, we've been evaluating our retail presence, and we believe we made the right decision to close down full price stores because they're simply not profitable enough, continue to drive factory outlets, and also, of course, work with pop-up stores where that is relevant. Looking at our wholesale business, we see fantastic momentum with our e-tailers, but a few of the physical doors are still struggling, and we see that there's still high inventories across many customers in Europe, which indicates, of course, that the fall will continue to be pressured by off-price business with a lot of clearance. But let's see, at least we can indicate that our reorder business is picking up a bit, which is a first sign of a recovery in terms of the sports market getting back into growth mode again. But let's see. Our distributors is declining, and that's due to partly timing, but also, of course, their customer in their markets, so UK and Austria, are sitting with quite high inventories. So that's the reason why we have a rather poor order book there. But overall, there's net sale growth in the quarter. We never sold more, and given the circumstances, we're of course super happy with that. Looking at gross margin, we continue to increase the margin, so we've been doing that for now 4 or 5 quarters in a row. So despite, of course, the currency working a bit against us, we still managed to, through reduced discounts, smart in trader terms, the channel mix, to continue to improve our gross margin. And looking at currency neutral, it's actually increased with 2.2 percentage points. Another sign, of course, that the brand is in really good shape. Profit is increasing with 55%, so of course very good at 8.1 million. And last, of course, the financial solidity is still very, very strong. So that's the main highlights. But again, of course, We have a long-term vision, so this is not about Q2 or Q3. We're here to do something long-term, and that's going to take a bit of time, of course, but we are on a good road and we're making progress every quarter. So the first one, of course, our mission is really then to inspire people that you can be whoever you want, and the key activity is training. So of course what we want you to see when you look at the Björn Borg logo is a brand, a best friend that is reaching out and pushing you those days when you're thinking that, well, this is not the day where I want to be my best version. So that's the intention of the entire brand. Long term, of course, we have clear financial goals of annual growth 5%, operating margin of 10%, and continue, of course, with a fairly high dividend. Our business strategy is to continue then to focus on the online business predominantly, and of course, focus and grow our sports apparel business together with, of course, building the brand even stronger as a sports fashion brand. We believe that that's going to be the key to also drive growth in all other categories. Our main focus is Europe, but also, of course, we're making good inroads in Amazon US and see fantastic growth numbers, yet though on a very low number, but looks very, very promising. So looking at Q2 then, so brand awareness, we have a very good momentum in Sweden, so up 100% versus last year. Looking at brand awareness for her, so we've done a lot of work with local influencers. Our marketing team has really managed to reach out to very, very strong local ambassadors. So that's increased our women's business, not only in terms of awareness, but also in terms of what we're selling. So very, very strong. And then brand preference in Holland is up 83%. And brand preference, of course, is a very, very important KPI because that's the brand that you would prefer. So overall, the brand is going the right direction. We're super happy with how the brand is evolving. We measure that every week in all of our markets, and those are the KPIs you're looking at right now. But also, of course, a much clearer indication is the sellout pace in own channels. It's the ability to reduce discount and still, of course, grow the business. That is clear signals of a very, very strong brand. Not to talk about, of course, everyone wearing Björn Borg wherever I look. Looking at our two major categories, so from a brand perspective, underwear has continued to increase. So purchase intent is now at 46%. So it's super important for us that we continue to manage and maintain our market leadership in men's underwear in the Nordic regions and in Benelux. And at the same time, of course, tap in and drive further growth in apparel. So both are increasing versus last year. So a strong sign that the whole idea of building a sports fashion brand will allow us to be relevant in many, many different categories. Looking at the quarter, so here you see Q1 and Q2. So again, we are looking at record sales, both in terms of Q1, but also Q2. And of course, if you put them together, a record first half year. So very, very strong momentum, even though, of course, the growth ratio is a bit low. Of course, we're aiming to grow even more than 3% in a quarter, but again, a record is a record. The country perspective is very, very different, and of course, partly is due to timing, but a very strong momentum in Germany, which is predominantly due to a strong recovery with Zalando. So the German market is up 39%. Netherlands and Finland and also Denmark is doing really, really well. We're struggling a bit in Belgium. We know that Belgium, is a tough market for physical retail. A lot of the European e-tailers are selling into Belgium. So of course, both our own e-com, but also Zalando, they're growing, double digit versus last year in the quarter in Belgium. But physical retail in Belgium is struggling. Also looking at Sweden, here's a bit of a timing impact. We see that a few of the customers in Sweden are sitting on a bit too much inventories. And also, of course, in general, the sporting trade in Sweden is, on a falling trend, if you will. So there's no underlying growth in sport distribution currently in Sweden, but we hope that to change, of course. The distributors, as we've said, is having a very, very tough quarter. So here then, running through all the channels. So wholesale, plus 7%. Own e-com plus 39%, own retail minus 2%, but looking at comp stores plus 21%. And if you want to experience super strong customer service, yes, go down to our studio store here in Stockholm, and you will be welcomed by simply an exceptional team. And not only that, you will also leave the store with a few of our fantastic products. All very, very strong fit. We have find this unique expression with the Borg logo and our different elements. It's very good quality, and also, of course, they're all long-lasting, have a very high sustainability. We're super proud over that. And again, of course, the negative thing from the quarter is our poor business with our distributors. So with that said, as you know, since a long time now, we believe that the true traction for the brand is online. So that's where we're focusing most of our efforts, both when it comes to building the brand and communication, but also when it comes to fueling growth. So of course that's own e-com, it's e-tailers, marketplaces. And here, of course, we continue to grow our online share as a total of our overall business. So a plan of a long-term strategy that is working out really well for us. And again, just running through the categories, so underwear -4. If you exclude the distributors, then we're growing 4%. So we see growth in all other channels. Sports apparel +14, so that's now the 6th quarter in a row we have double-digit sports apparel growth. Bags is growing, footwear is declining, and of course here we can do a lot better. But overall, of course, I think we've showcased again that we can manage numerous different categories and driving growth from all of them, meaning that we managed to build a very relevant brand with a lot of different entry points. So I think with that said, as Jens will showcase as well, not only the top line is evolving good, but also the rest of the lines in the P&L. So of course we're happy with that. So Jens, please guide us through the bottom line for Q2.
I will do. Thanks a lot, Henrik. Good start. Very welcome from me as well. Fantastic to be back at Panzer. I had a great summer. Also saw a lot of Björn Borg sports apparel down in the south of Sweden where I spent my summer. Fantastic to see. And it's so good to be back, to meet all my fantastic colleagues. Beatrice, still there, making everyone smile at the office. So I just love coming back to work. Looking at the bottom line of our P&L, the gross margin we talked about already a little bit, so it's still quite strong at 56%. Looking at if we exclude the currency effects, that's working a bit against us. It's 57% in fact. So quite strong operational gross margin, if you will. In terms of the operating income or the EBIT, again, a very strong quarter of 8 million compared to 5 the year before. So that brings us to quite a good year to date or first half year in terms of profitability on the EBIT line. Net income follows the same trend, if you will. So provide small numbers in Q2 compared to, for instance, Q1 and Q3. That just follows our seasonality. So Q2 is normally where we have let's say the smallest numbers, if you will. But very proud of the profitability that we can show in a quarter like a Q2. If we focus a bit on the balance sheet items, just to show that we believe we're still a very solid company. The equity of assets is remaining on a high level of 54%. Same as when we closed 2022, and we've climbed up from the pandemic years, if you will, to a very solid level. Our net debt is increasing and now stable on a fairly low level of 26 million compared to way above 100 million only a few years ago. So we managed to reduce the debt quite a lot in the last few years. When looking at the working capital, stable again, I would say around just above 20%, 23% when we closed the Q2. We've been down to 20-21%, and that's really where we want to be. But clearly that depends on which month you're in and how the seasonality fluctuates a little bit as well. But the average we aim to be somewhere just above 20%. So quite happy on where we are when it comes to the working capital and how that's employed in the company. So with that, we close the quarter. That makes me very, very proud. Good profitability, good sales, and also solid financial items in the balance sheet. So I'm very pleased and happy to turn over to you again, Henrik.
Brilliant. Thank you. Thank you, Jens. So of course, there's no doubt that we also feel that the market circumstances are changing. So from an end consumer, pull in the market, we see on one hand a very, very strong momentum for the brand, and of course, as you saw, super good momentum for our own channels. But talking to a lot of our wholesale partners, we see that many of them are struggling. With high inventory levels, low gross margins due to a lot of clearance, and most likely, we at least anticipate the fall to perhaps be even tougher. But we can see though that throughout tough times we have managed to grow the business, to add profitability and to continue to take market share. That was the case during COVID, and that's the case so far during 2023. So for us, I think it's of course on one hand understanding that the markets are changing, but at the same time, stay consistent and true to our long-term goal, which is to build a global iconic sports fashion brand with one strong mission, that is to inspire people that you can be more. And that continues no matter the market circumstances around us. There's a couple of highlights, of course, that we have now repeated in circles, so bear with me. But of course, the first, the brand is really continuing to gain traction in all of our markets. And the brand, of course, together with the team, that's our biggest asset. That's what makes us unique. So that's very, very promising. So not only sports apparel or the sports brand side of it, but also we're managing to maintain our very strong position in men's underwear. So that's very, very good. Secondly, of course, we do record sales. Yes, of course, 3% is not much, but then digging deeper, 39, almost 40% growth in own e-com, both in the quarter and also year to date, of course, indicates that there's a very strong momentum for the brand. And also together when with the comp stores, growing 21% in the quarter. So there's a lot of consumers out there that really likes what we're doing, and of course that makes me super, super proud. And I think it's just a combination then of having a brand with a compelling story, but also making great products at accessible price point with a very high sustainability focus. And I think that combination is really working for us and will continue to work for us. Last, of course, the whole idea with this journey that now was started out many, many years ago was really to prove to not only ourselves but also to everyone else that you can make a brand transition. You can move from something very nice into something even better. So not too long ago we were only underwear, only men's underwear and only printed underwear, and of course now the brand is something completely different. So of course it makes me super happy just opening up Dagens Industri. A few years back it was the underwear company, the underwear company, the underwear company. Last quarter they talked about the sports and underwear company, and of course the perspective of us from the outside world is also changing in terms of us then building the brand into this new position. So that makes me super happy as well. So a challenging quarter, but still I think we managed to handle all those challenges in a very, very good way, of course, thanks to an exceptionally talented team, of course. So with that said, I'm sure that Hjalmar's going to have a tons of questions, so hang with us for a few more seconds and then we'll run through them as well. So thank you for tapping in and listening.
Perfect. Thank you so much, Henrik. I was wondering if we could start off with the own e-com, which of course had a great contribution in the quarter. Could you just remind us again of the drivers here, and are you satisfied with the average pricing level via that channel in the quarter?
No, absolutely. I think there's many different things that is working very, very good for our own e-com side. So on one hand, of course, we see that almost all of our channels are working really well. So everything from paid search to paid social, newsletters, organic search, all of that is really working very, very well versus competitors, and of course also versus last year. And the main explanation is really that we invested quite a lot into the e-com organization a year and a half and 2 years ago, with having internal competences, and I think that's really, really paying off. So we're doing more and more of our own e-com business, completely on our own, with less consultants, of course, helping out, and of course that makes us much more agile. And of course, e-com is a very, very quick business where if you just read the data right, you can adjust the business on a minute, hour basis, and then of course make it even better. So I think that's probably the main reason for our fantastic growth. Together, of course, with a strong cooperation with the brand and marketing team that has built a very, very strong brand.
Thank you. If we look at the market for sports apparel, during the pandemic there were lots of mentions of athleisure. Could you just remind us, where are we in terms of athleisure right now? Is this still a driver of the sales of sports apparel in the market?
Well, I think it depends a bit, of course. It was clear, of course, during the pandemic, our behaviors completely changed. So no one went to the office. Instead, of course, you were wandering around in your own home. And of course, then you will wear different things than if you go to the office. I don't know, or perhaps a few, but not too many are dressing up in a suit if they're just going to be at home. They simply would wear something else. So of course, we know that the way you create sports apparel is, of course, much more fitted to being comfortable and being nice to wear, whilst other things that you might wear is potentially also a bit more for looks, like a suit, for example. So of course that we saw under the pandemic, but that was due to change of behavior. And of course now we're more back to what it was before, but we still see, of course, there's a massive trend with using sports apparel also when you don't train. So whether that's at leisure, or if you want to call it something else, I'm not sure if you want to box it in though, but we see, of course, predominantly again amongst the female consumer that for example, we had a fantastic success with our seamless tights. If you haven't bought them yet, buy one for your daughter, your wife, your girlfriend, and she will love you even more. I'm certain of that. They're simply amazing. But we also know that half of the consumers they use the seamless tights for running, for yoga, for all kinds of trainings. But the other half, they have them when they go to work. So of course that is a big mix. And I think for us it means that the distribution could also change, because of course if you go to a stadium in XXL, you're more looking perhaps for apparel that will make you sport or train. But if you go into an NK or a Volt perhaps, then you might look for apparel that will do other stuff for you. And for us, of course, it means that we need to be represented with our entire apparel collection, both in sports stores and in fashion doors. And of course that's the beauty with online business, of course, and you can have the sort of the full range, and then simply let the consumer pick what they would want to pick and use it for whatever they want to use it for.
Yes. Yeah. So then, I mean, since you keep growing the sports apparel, then I guess that means you're taking market share. Are you confident that you can keep on doing this?
Absolutely. Of course, I have a background from Peak Performance and also Adidas and Reebok, and so of course I know the volumes that you can create in Europe and in Nordic, and of course even though we're growing double digit, we're not even close. So there's massive potential to continue to drive sports apparel growth in already existing markets. And then of course together with the push that we do in Amazon US and also in Germany, where we have almost no presence at all. So that of course gives me reassurance that in terms of growth opportunities, well, there's plenty. Then of course to realize them, that's going to be a challenge, of course, but there's plenty of room to quadruple the sports apparel business without opening up any new markets.
Thank you. And if we look at the gross margin, I mean, if we set aside the FX component, could you just remind us the impact from, for example, input prices, shipping, and so forth?
Yeah, no, but so there's a lot of things, of course, impacting our gross margins. And as you say, one is the currency, but let's take that out then. So we have made a lot of work to improve it. And on one hand, of course, it comes down to discounts and channel mix. So of course, driving our business with own e-com and own retail stores, that will lift the gross margin, reducing discounts, so fueling the brand so it becomes worth more for the end consumer. That means that you can reduce discounts, both against wholesalers, but also of course in our own channels. So that's increasing our gross margins. And also of course, if you look at what is happening on container prices and a few other components, that's also of course helping our gross margin. But overall, of course, we believe that the gross margin can continue to be improved a bit, but also it depends on channel mix and of course also our product mix. So of course we know that depending on which product category you're looking at, the margin looks a bit different. And we also know of course that our sustainability work that we focus a lot on, that will even increase. That's most likely going to have a negative impact on the gross margin. So then we need to find other means to mitigate that, so we can continue to work with a gross margin of around 55, 56%, which is the main objective, at least from a midterm perspective.
Thank you. You mentioned that many actors have quite high inventory levels in the market right now. Do you think that this, looking forward, will affect the campaign pressure that you will face? And how has the campaign pressure been this summer in terms of pricing that you face in the market?
No, but if you look back over the summer, but of course in the first half of 2023, I think we can see that most of the customers have been driving volume with discounts. So almost everyone, of course, is reporting lower margins, and that's of course is due to very, very aggressive sales periods. And most likely, I believe that trend will also continue into the fall. But here, of course, it depends on which product categories you're in, and I think we believe that where we are, so mid price point sports apparel, very accessible price points in all of our categories, being the market leader in underwear. We believe that in those categories, I think the pressure for off price or discounts gonna go down a bit. But of course, also depending how the fall evolve, will it be a cold winter in the Nordics? That's gonna have a massive impact on the sporting goods market, for example. Will it be a warm winter? Well, then it's going to have a different impact. So it's hard to see how the fall will be, but we see still, fairly high inventory levels across Europe, which indicate that there will also be, a lot of clearance activities, throughout the fall. But with that said, we also see a couple of accounts actually starting to reorder, which of course indicate that they need to, refuel their stock with newness and new products to maintain, relevance in the market. You can't just sell old stuff at discounted prices if you want to continue to grow the business.
Thank you. And then finally, could you just remind us again on the drivers of the good development that we see in Germany now in the second quarter?
I mean, in Germany, it's purely down to Zalando. So we do work with a number of other accounts on the German market. We have a very strong country manager based in Berlin. We do tests all the time, so we can get traction also in sort of physical retail. But the brand is still fairly weak in the German market. And here we've said that we need to focus even more to build a strong online presence. If you look at influencer marketing and discount code, that's fairly strong in Germany. So I think we can probably do more there. But the answer to the German development in Q2 is purely related to Zalando and a very strong sort of bounce back from a fairly weak Q1. So that's one of the most important accounts that we have in the group.
Thank you so much, Henrik.
Thank you. Thank you. Good to be here. Excellent. Have a great Friday. See you at the Sports Hour.